Hello, hello. Good morning. Oh, my bad. Good afternoon. Good afternoon. Today is Wednesday, April 24th. It is 2:35 p.m. Uh, I hope you had a good day. It is very it was Today was one of those days where homework was really important. And it is there were some things from the homework that were really important coming into today. And I was having some doubts today regarding watching or not watching um, Jim's webinar today, because sometimes when I have an opinion of the market, he kind of like he also has his, and sometimes I get a bias, right? I get bias, or I second guess myself. I have that tendency sometimes. Um, and also, as I said at the beginning of the week, it was this week I have not that much focus. I have some things to do. My focus is not 100% in the market, and I am trading or doing things with caution. I'm being extreme cautious this week. Yesterday or before yesterday, I didn't have a good day. I was Yesterday I didn't have a good day. The day previous also didn't have a good day. I was pissed at myself. I was upset at myself because of the decisions I have taken. And I guess because the outcome wasn't that bad, even though I acknowledge that it has it has an impact in what happened yesterday with my performance. It wasn't a good day, but you have to learn how to leave things behind, move into the next day with any baggage. Easy to say than done, and here we are today. Uh, from the homework, we have something really interesting happening. Let me put these things. I guess I guess I Let me see if I can find it here, or if I what I did. Okay, this is it, right? Bond markets, the most important thing, bond markets were in range, and but at the lower side. That's one thing, right? And when you, boy, I didn't have this. I don't have the intraday, but the intraday was short covering, was clearly short covering in the bond market. Um, and this B shape, right? This B shape recovery in Nasdaq, happening here, happening in ES, happening in the Dow as well, was concerning. But just looking at this, something really pop up, right, in the ES, and was that we can kind of like notice a range in the upper side of the ES, and another one in the lower side. You know, some kind of double distribution in the daily time frame. If we put these two ranges together, we will have a profile, right? Some sort of profile that will resemble a double distribution. What I mean, we will have something like this, right? accumulation here, single prints, accumulation here for this one and for this one. The Dow, the range, this range was checked a couple times here, and now also was tested like 4 or 5 times the past week, this and the past week, and it did not have acceptance. The potential destination of this movement is the opposite side of the range. But also, it happens that it is a yearly, this is 2022 year high in the Dow, right? And was selling from the 100 moving average. In a very weak area, the level reference to sell. Not that the weakness doesn't come from the reference, but the traders who sell from that reference. That is the most important thing here. And the Dow, Nasdaq also was buying from, a yearly, a 2022 high. The first time markets come close to the references like this, the first time usually there's a buy. Now, it may check a couple times before it moves through. And here's when we'll see, if this movement, this penetration has acceptance or the rejection can target, in this case, the previous all-time high. Right now the market is here. Now, why I'm talking about this? Because when I move this reference, when I took this high here, also Nasdaq has this very specific level, right? It was support before, and now it's resistance, this level here. Right? And I have 2 references in ES, this one and this one. And when I move this 3 including Nasdaq, to my charts, this is what I have. I have the 16 range low, this is the low, the upper range, and this is the high of the upper range. Now, let's check Nasdaq. Okay? I had this area here, This late rally high, this is support resistance, previous go-no-go area. This is where the market has kind of like an area. Nasdaq has, you have to give more room in this market. Right? Remember, you have this kind of markets. It's different. Nasdaq trades different than the ES. Now, that being said, right? I have my references here. My references here in ES. The overnight, right? The overnight. I didn't check actually what Tesla earnings were, but there was just an impressive rally. If you remember, you got to know what market you are trading, what type of market you are trading. Here, I'm going to expand Nasdaq here, right? The 100 moving average was somewhere around here, maybe here, something like that, right? But we had a rally that was sold right from exactly from the 100 moving average in the overnight after Tesla, right? Then it breaks, and then I left. And what happened after that, I saw this movement, which is a resemblance of what happened, I guess, I don't remember when, maybe last week or a couple of weeks ago, the same kind of trading, right? But it was the week before was in the opposite direction, right? Selling, meet with buying, rally, and then the break that take that rally, that low out. Same thing, but in the opposite direction today. Trading has a lot of repetition, but with variation. And what happened after that? today when I came to the market and I saw this low, this low very close to the 100, right? And this 100, these numbers that I have here, these are just references. I put there to see what the market does, how the market trades around those references. I don't use those to buy or to sell, but what the market does around those references. And let me explain you how I get those ones. When I have my chart here, let's take the ES here, right? This is the ES I have here. Okay, I have the ES here. This is a non-adjusted chart. I have the 100 down here, 49.86, the 50. It's kind of far, far from where the market is or was in the morning, and the closer was the 50. And notice where the 50 is as well, right? Kind of right now it's right at the bottom of this range, right there. And I have another set of charts, which is the same thing, which is the ES, but this is an adjusted chart. What is the difference between the adjusted and non-adjusted charts? This is the difference. Okay, I don't have contract chains here. This is a continuous chart here, right? This has an overlap. For example, here September contract, December contract ends here, around here. This is not a gap, right? This is, if I check this contract, it doesn't have a gap here. And this is the new contract. During the week of rollover, the new contract starts, right? Here is December, here is March, and now we have June. But if I do the adjusted, which I have it here, I check the settings. How do I have this set? Adjust for contract changes. And my charts are different here. Right? My charts are different. Notice that there's no gap. The gap is in December and October. And my settings are also, my charts are also, you have one for the adjusted and one for the non-adjusted, just a regular one. And here's different, right? I can see here the 100 is kind of like the market was in the morning or yesterday, kind of like in between the 100 and the 50. So these moving averages were not significant. We're not going to have kind of like significant impact today, right? At least not in the short time frame. And here also, because this is, I can very well also use, instead of doing that, I can use this 24, right? Which is the current contract. Notice what do I have here. This was at the time a no-go level. Right? But that's complicated. That's complicating things too much. I really, again, if you have not watched Jim, I know it's a commercial, right? I know he does this to advertise his upcoming intensives, but there is a lot of information you can have for free from those intensives, from those webinars, right? If you have the opportunity, you have a chance, if you have the means to go or to take his intensives, I strongly suggest you to do it. Because what you learn there, many times we don't know what to watch. We just keep, most traders, more short-term traders, more retail traders are just caught by price, are following price. One example that I like to use is, something like this, right? Pro football. Something like this. Okay, this, okay. Just look at this, right? This is a retail trading. You will say this, no, retailers are not the blue ones here, okay? Small traders are not the blue ones. Small traders are the reds, are the kids here. What the kids are doing? They are just following, but wherever the ball goes, right? And whenever price moves, that's where. That's where small traders go. Okay. Just look at what's happening, right? There's a bunch. That's kind of like to do an analogy of what most traders do, right? Most don't even do the homework, right? Homework can be something really simple, really simple. We don't have to complicate things here. That's also that's something Jim also mentioned today, and I was kind of the past weeks, I have this problem when we have this change of contracts. I had like too much things to see, to watch, to monitor. I didn't have this change of contract, but I am having that now at this moment. And sometimes we just overly complicate. We just, the dumbest, the better here, right? And from yesterday as well, what we had, let me close this again. We were talking about the potential formation of 6-day range, right? 1, 2, 3, 4, 5, 6. That was just a potential formation yesterday. We were talking about that yesterday. And that information, right, still is useful today. Did I know what's going to be useful? No, I did not, right? But when I started to do my homework, when I watched the range that was forming, when I realized that we have this upper range, this lower range, this significant reference here, and the thing also, right? The adjusted. This was very important here. It was a key level. This is a key level, right? It was a no-go. It is a no-go level. It either stops here and bounces, or it is stops here and keeps selling. What it's going to be, I have no idea what that is going to be. And all of that is just the homework, okay? And all of that takes us to what is happening today, right? I haven't seen a short covering day in a while, and we had that yesterday. I missed the opportunity yesterday, all right? Yesterday, there was, I guess I was trading NASDAQ, not the ES, but you can see what happened, right? Market opens, makes an attempt to counteraction the overlying inventory, and then, boom, you have a steam. It was clearer. I think it was, let me check this. I think it was clearer in tech, all right? Yeah, it was clearly here. It just shoot its way up. I guess I got something here, and then market gave us a second opportunity, right? Really good location, but I missed it. When I tried to take, market was up here, right? And you never know what's going to happen. I didn't know the market was going to come back up here. And when you have this kind of days, short covering days, I also didn't know was going to have this formation, right? This formation, because it has a steam, and then back and forth. And these days only have one opportunity, only one, and that was the opening. After that, we didn't have any. There is no excess here, no excess here, no excess here, but we didn't have any after that. And I get kind of like overconfident, and the thing is, I managed yesterday. I had a good profit, but that managed to lose it all, to lose everything and more. And that is so, man, that is, it happens to everyone, all right? It happens to everyone. This job is, it's like driving. You cannot take a break here, right? You either are driving with all your senses on, completely soon focus in what you are doing, or you are not. Right? You are tired, you have other issues in going in your life, things that you have to resolve. You know, you cannot, unless you are one of those persons that can, compartmentalize. I don't know what's the word. I hope you have an idea. I hope you have the idea. Compartmentalize. Unless you can do that, you better do only one thing, because it can be very, very expensive. I paid the price yesterday. Right? I really did. I wasn't trading yesterday. Once this happened, I moved to the Dow. It was very systematic trading there. Every time the market trade to a reference, it was tested and then keep going. Right? And I guess that was my mistake. Just a moment, please. All right. And that, having that, hey, yeah, how are you, man? Are you there? Oh, yeah. I hope you have. I'm just check that you are there. Something that also Jim mentions all the time, and also mentioned today in his webinar, is this business. Man, this business is very, very treacherous, right? And today, let me tell you something about today. What happened? What I did. I had I had a really good day, right? And really good. But I had this thing, right? This thing. I want more, right? I wanted more, and boy, that little thing cost me. Almost cost me. It cost me. It cost me today, right? It cost me. Um, I managed. I managed to give all the profits away. Almost everything. No, actually, I give them all away and more. But then I come back, right? And I come back using something that happens all the time, right? What this business is about, right? We do our homework. We have the levels. We have a situation. What is inventory? Whether it's value? Whether it's the 5100? Whether it's the 50 moving average? Whatever reference we may have. But what matters at the end is the situation of the inventory, right? I believe today, Jim, or I thought just Jim, I have the same opinion as Jim. I was really kind of like happy. We were having, when he spoke, he spoke all the things that I was thinking, right? About the inventory, how, this, right? This is, and also yesterday, I believe we also check, right? We were checking these things, right? And this is based on this happened live. What observations tells you, right? While a good volume is, where do we have good volume, for example, in the market, right? And yesterday we were telling good volume could be 4 or 4.5. 4 was good volume, right? That's what we said yesterday before the opening, I believe. I don't remember quite well. And this is just based on observation. I got that. Right? I got that, and that's mine. And today, Jim comes and say, oh, "Okay, today is good. I will consider good for that." He said that a specific number, 4 billions, right? I don't remember how many times he said that before, right? I don't remember how many, but he said that before. I believe it was different numbers each time, but it is just based on observation. You just watch this one and what you consider is good, right? Good volume, right? Based on what you have here. I mean, I feel so happy, right, with myself. Okay, okay? There is something there, right? There is something there. Your learning and volume was decreasing as well here. You keep learning, right? Something very, very personal also that happened to me this week. You know, my father is almost 80. Well, I think it's more than 80 now. I don't know how old is he, but he's close to 80 or a little bit more than 80. There's a time when, you know, when I think, I thought, oh man, I know all that he knows, right? Maybe even more. But after a conversation, I was talking to him a couple days ago. Boy, that man just knows, the amount of experience and wisdom he has is just unbelievable. Right? I'm never going to be able. I feel like those brothers, right? That are always one. You have all the eldest and the youngest that are 2 or 3 years apart, and the youngest is always thinking, okay, in 2 years I'm going to be just like you, right? But he never is going to be like him, man. I feel like that, and with him something like that happened with him as well. He's always evolving. And today, I did something in the morning, right? And I did something to the downside, based on what happened hitting the ES, right? Here, when this market closed this gap, and then rallied and took this high, and the second period didn't. Okay, B didn't take A high, but my reference was not A high myself. It was the context, right? Based on my homework, I was expecting something here, right? I was expecting the market chewing its way up, maybe kind of like around the center of the single prints from this day, right? Which happens to be, right, not the day. I wasn't looking to the day itself, but to the distribution that we have in the upper side and the distribution we have in the lower side, right? And volume, brother, volume was, was good the first period, and then it started to decrease, right? So this is just a confirmation of what happened yesterday. We didn't have nothing here. And if you watch Jim's webinar, this thing to the upper side was actually kind of like have a different meaning if it would have materialized, which it didn't, right? And based on the type of trading that we have yesterday, and also these highs, right? Once this high was taken, we can have some sort of, and this happens all the time also, some sort of liquidation of this inventory here, right? The late laggards longs that we have here. But this kind of movement doesn't take the whole day out, Usually, quote unquote, usually, okay, quote unquote. Please take what I say with a grain of salt, and you will see these. You will gain more, I don't say this, knowledge or experience, right? The more you see, the more you learn, right? Sometimes it's both a couple ticks from this distribution, right? Which is a fail, right? Fail to close in these distributions reinforce the idea that this market can rally back to highs, right? Another times, it is bought from this level. Yeah? Kind of like from where it was bought now, right? And I took my profits when it was close to sale or something like that. Not that much. I miss all of these things. okay, for because of the way, and then I left, because I was super tired, and then I managed to give away everything here. I wasn't passionate. I wasn't very very impassioned here, because what I got in the morning kind of like give it gives you a false sense of confidence. Now you got this idea that this market, come on, man, I think this is a good area to take along, because how the market was trading, right? How the market was trading, and based it on how the market was trading, also, I actually did I see value here? Yeah, when I took this trade, value was higher, right? But I wasn't paying attention to value at that moment. Really, I wasn't paying attention. When the market was down here, value was overlapping. I noticed that value was overlapping, and POC could very well be in here or in here, in any of these, because the time happened, the time left in the session was kind of significant here, right? And ending one time frame lower early in the session, this also increases the also rate or rotation. And I got that feeling like, boy, this market can have something here. And I get long, okay? And I went full size, I averaged full size, which in this case was 4. But then I realized, I make a big mistake there, right? I wasn't doing the ES, I was doing the Dow. I was like, God damn, man, that was really bad. That was it is because you are not just in focus, right? You are not 100% present here in the market. Just like driving, 1 second, it doesn't matter how good you have drive the past years or your whole life. Everything can be taken away from you in 1 second. It only takes 1 second, right? It only takes 1 second. You're having a good day. One trade can take it all. Okay, we cannot have distractions here. And that's what I said happened here. And then when I correct that mistake, I set my focus now in the next thing here. The next thing was, this market has good odds of rotation. Volume was low. The market didn't chew into this area here. Also, same thing happened with Nasdaq. What happened with the Dow? Let me check. The Dow also was forming a range, okay, but I wasn't watching too much of that market. I did some trades in that market though, and my trades were in the lower side. But why I took a lower side? Okay, the also rotation were high. The bond market, the bond market, the bond market was a really, really important, kind of was the catalytic that I used to take this trade up here. When it takes the daily low, when you get out of the inside bar to the downside, I took this long here, somewhere in here. Notice how close it was to previous period halfback, but that wasn't, that is just one piece of information. What I was paying attention is to the auction here. And the next thing I say, okay, I want to be sure. I don't want to be long this market. That's what I thought. This market is truncated from yesterday. Now we have some extension. This has been hit. This high has been corrected. The high is not good. It's kind of questionable, but value is building over yesterday. I'm going to remove this inventory. I'm going to close. I'm going to merge these two days. right? We have there. We have short covering, P short covering, right? This is what I use, right? I didn't merge, but I am doing this to so you can see it, right? The value was being built just over yesterday's value, okay? So the auto rotation will high. But where do I short here? Okay, we have this auction here that I missed here, right? My longs were in this area because this is when I came back to the market that I took after taking a nap. I rested well. Okay, there is something here. I made that big mistake. Okay, well, this market can find some sort of resistance, right? Sometimes I had some potential areas here. One could have been the 5100, right? Which is very questionable. The next one is Cedar, which is also questionable because this puts the market close to closing these distributions, right? We have one distribution here in the top. I don't know if you can see this. We have this distribution in the top. One here and another one here. Right? And my plan was, okay, I'm going to do something from this area here. I'm going to do something here. Right? And I started, okay, the next thing was, how many contracts do I want to do here and what's my stop? Okay, I started the market just stalled here. It was taking too much time to take this reference here. First this one, then this one. Very mechanical trading and really struggling its way. Okay, volume didn't increase. I took my chances. I started to take my chances. Let me see where I remember. I guess one was here, right? One was here in this area just before closing this distribution here. When the market took these references out and it took it fast, right? It has a spike. It really, when it did something like this and then boom, just like that. Okay, that's when I closed. But I re-entered. Okay, I re-entered somewhere in here, something like that, and I added a couple more in this period when this market didn't take this one, and then just started to work from here down. And again, I didn't have all these things, right? My potential destination, my destination location was just settled here. Just settled. And why settled? Because the 5100 is right there. We have a rotation, half of is very close to half back, which is an area where potential sellers can appear. We have the 5100 also. Okay, and the game, the play was the removal of the long inventory that we had here. That was it, you know. That was it. You know, the laggards come in this part, you know, buying from half back. And at the end, it was just that, no more than that. It is just inventory, man. But the auction, we need to pay close attention to the auction, to the internal action, what's happening, because we are not investors. Okay, we are not investors. Most of what we do, if not everything that we do, revolves around inventories getting too long, inventories getting too short, and the rebalancing of those inventories. When the rebalancing happens, you have this back and forth, and suddenly, boom, something happens, right? And when you have that spike is my out. It took me long time, right, to understand that, and it took me a lot of practice also to start actually trading, right? You have your plan and then you trade. You know, you have a strategy, trade, and get in and get out, either for a loss or either for a win, whatever it is. Right? I am not happy. I am not happy this week uh, because I knew I shouldn't have traded this two. I shouldn't have traded today, not yesterday, and I guess not even Monday. But still, I did it, and I have no one to blame. Just myself. Just myself here. I didn't do a morning stream because I was so tired, right? And I thought right? I thought that there was some good. We had some good opportunity. We were going to have some opportunities today at the opening. I don't want to distract. I didn't want to have that distraction. And so I decided just to be focused on the market. Plus, Jim has his webinar as well. So I was watching that, and then just before he ended his webinar, the market opened, and then we just keep going, keep moving. Now, the next thing, okay, the next thing you ask, I have two things before going to your question. Is boy, I forgot what I was going to say. Okay, let's go to your question. Okay, you say inventory from 2 days ago is relevant. It's as a question, right? 2 days ago we have this one and we have this thing as well. More than the inventory here. Okay, what kind of inventory do we have here? Let's check that. Right? I have a double distribution there here. Right? I think what matters here. You always carry this information. Right? You always carry this information. The thing is, because you know that there is supply there, right? This inventory, all the traders call it supply. You got this, right? This second part, we have the breakout. You have this range here, a breakout of the range, and then goes all the way up. All this was removed. All that was removed during this pullback that we have the close. But what happened afterwards? You know, the overnight took the market higher. You know, and the market opened up here. There was no gap. I guess Sam was talking about a gap here, but there was no gap here. And I like this kind of actions here. I really like this one. Right? When the market opens and goes higher without a gap here, because it has more staying. I have noticed that if you pay attention, it has a tendency to stay higher a little bit more than when it gaps, right? All the movements, I guess this is observation, right? The movements can be sustainable. It takes some time, right? It depends on what you are watching. Okay, that's why I say you need to do your observations. Okay, I sometimes cannot put in words what I am thinking or what I am trying to say, or I think the delivery of what you hear may be something different that I am trying to say. Okay, but the thing is, the more or the farther we go from this inventory, the less relevant it becomes. In my case, I also use this, what other traders use, volume profile, I believe. Where it is? Oh, here. You know, that's why I have this chart. You know? I didn't use this today, to be honest. Today I didn't have a single look at this. No, from this day, from you mentioned 2 days ago, right? Notice where this inventory, how far we are from these areas here. Okay, this inventory remains. This remains. This day have not taken this one. Didn't even tested this one. So volume is building, right? Volume here, here, here. Now we have up here. This day has removed this, so this is what doesn't count, what it counts here, and what it counts here. And yesterday we were talking about something. I hope you remember this as well. And this is why you do your homework, because when either you talk about that or write, you know, believe it or not, you will remember that. Let me add more days to this. Okay. Here you got more. More days. Oh, come on. Okay. Yesterday we talked about that how little volume this day has, right? There's absolutely nothing here. Nothing here. And here also, there's nothing here. Okay. The next volume we have is here. Again, nothing here all the way up to here. This vacuum, there's a void, there's nothing here, and then you have some volume here. If there is something to the upside, okay? If there is something to the side, the market should have no problems, right? No issues, no complications to go through those areas with ease, right? A short covering movement can take the market and all the way up to here really fast or quick or with ease or with conviction. Okay? That's another word. That's another thing we have to monitor also all the time, the conviction. We didn't have conviction today. The way how the market traded, it really, that part also played a role in my short here, right? And the long here, which of course I missed, right? I am slightly in the green, but it could have been a really good day, right? And you know, yesterday I was feeling, I mean, this is the thing, right? This makes me remember, of this documentary, Floret. But this lady, when she was working, he saw another traders, right? He started to work with another traders, more seasoned traders. And after this session was over, they used to hang out in the bar. After the market closed. And he saw this guy, right? And she couldn't understand. I mean, she saw this guy. She couldn't understand. Why are you drinking? Why are you so happy? Right? I saw you lose almost $20,000 today. And the answer is what I remember. Right? You know, if I focus on that, I'm not going to be able. You know, I'm going to be able to see the opportunities that tomorrow can bring. Well, I remember that, and that is that's a simple statement, and I wanted to get to that level, right? You once also asked. I guess we talk about simple rules, right? I also have something else here in my. This is my daily. Right? This is my journal. It's very personal. Right? I have some very personal things here. I have here, for example, what issues do I have? As soon as I see something that is hurting me, which I got what is hurting me today, right? Or what is hurting me, then identify the issue, and then I got the next thing. The next step in this process is next goal to achieve. What do I want to do? I need to find out a way how to get, how to achieve that goal in order to repair this thing, right? And that's a process. It's easy to say, it's easier to say than done. One of these things, for example, next goal to achieve was, be in total state of relaxation. Okay? Be in sync with the market, be one with the market. It's very simple. It's very simple. And I'm sure you have heard that everywhere. Right? But when you get to that state, okay, I have a trade. The trade is working, I do this. Okay, the trade is not working. It's not you. It doesn't make you, right? It doesn't make you. That comes with another statement. I got another goal to achieve. So if I lose, it doesn't mean I am a loser. Right? Because remember, the vast majority of traders win here. The vast majority of traders win in this business, or have winning trades, right? The vast majority. But there are few that are successful. Okay? There are very few that are successful traders. Another one, go with the trade. I guess I misspelled it. This should have been, it's go with the market, right? It's kind of like assume it a little bit. Go with the trade. Once you identify the trade, take the trade, right? That is what happened today here. Okay, you base it in your observations. Do this. Okay. You think it's going to go higher? You think there's some good also rotation here? Just take the trade, right? Take the trade. You think it's going to have some rotation here? Take the trade. But be prepared to close as well. Be prepared to lose. Okay. You're not right. The market is the one who's going to tell you you are wrong or you are right. And that is what I wanted to talk about today in this stream, right? What the market is doing, what's happening here. Also, I have seen this over and over, man, happen over and over. We have earnings today. I believe. What do we have today? We have Google, I think. Let me check what do we have today. Simple rules, homework, what else? News and earnings. Okay, news and earnings. Yeah, I know, we have Meta today. You have Meta today. Yesterday, I was also talking about Tesla. Tesla has a bad report, bad earnings, okay? Bad earnings, but look at what happened to Tesla. And this is also something we talked yesterday. All right? Before it happened, I was telling the Fed price for Tesla could be down here, but doesn't mean it's going to go down there in one day. And the condition of this inventory is super short, very, very short. You got the moving averages, 200, 150, way up here relative to yesterday. And this market, look at this high here, right? The range here. Now this market has re-entered this range, right? The potential destination, okay, could be the opposite side of this range. Now that the market is up here, but also well, we have some sort of short covering here. This market was set to a fall, was setting for a short covering. Did I know that was going to happen? No, I did not. I have no idea. I wouldn't bet that. Right? Now, Apple is right at this key level. This can go in either direction. Higher, it can go lower. Where is Meta here? Okay, Meta. Look at what we have in Meta. Look at these lows that we have. This is not the... Let's take this one out. and put it down here. Right? It's buying from this level here. And look also what do you have here. You got a bunch of highs here. You got a bunch of highs. Firecracker effect potential here. Mechanical buying from this level and huge gap here. This can have a whip, so either take the highs and then come back and take the low, or take the low and then come back and take the high. Which one is going to be? I have no idea, man. No idea. I don't even know if that's going to be the case. Nvidia is buying from getting close to the gap, selling from 50. You know, the most, and coming back to your last question, most of this job has to do or revolves around rebalancing of inventory. Okay. Once I had this liquidation or these laggards, the next thing is continuation. How do you monitor for continuation? Okay. I got the 5100. Okay, I don't want to get close to that number. I'm going to cover before going that. The market could have been very well down here, but that's not part of the plan. Okay, I got the plan. This is a rotational day, and odds are that this can find buyers anywhere, right? The same thing with sellers. Thank you, man. I really appreciate that. I really appreciate your words. I hope it helps. Some was really happy yesterday or today. Finally could put him in contact with this friend, which I thought he had Sierra before. He doesn't have Sierra anymore, but one of his friend has Sierra, and he sent him some setups for Sierra because Sierra is very complicated. And something I was thinking today actually is I guess I'm going to, because what I use here, this is what I use, right? I use these volumes here from the dailies. I don't necessarily, I could be very well, if I remove this, for example, if I remove this, right? If I remove this from my charts, of course, okay. I guess I can be okay. I actually, this makes me remember of something. This is how it all started, right? I had this is how I started this. When I had a comparator and I started to look at this, I started to look at volume profiles, right? Then I added the market profile here. Then I added market profiles. Right? And then because of observations, then I added the comparator. I added kind of like more things to the chart. Then it became overcrowd, super crowd, and I started to trim again and come back to to what you're watching now. And then again, I am thinking, okay, I guess I can get rid of this volume profile. And why I started to do this, because I have noticed that volume, not necessarily, the value or these nodes of volume don't necessarily go along with TPO, with the value, with the TPO the red side in TPO, the high volume DPOs. But notice something here, it kind of coincides here. This here, today's, oh, look at this, man. Look at this. Look at this. Huh. Check this out. We have volume here and a bunch of TPOs up there, right? But volume is lower. And now, yeah, it's not the same, but kind of, right? If I take this day only, no, this is short covering here. I was thinking maybe I have value here and then the same thing that happened here, buying here, but TPOs in the upper side, selling here, but TPOs in the lower side. Huh? The opposite of that day. I think the market also remember, and this is man that I can speak good. I can speak good enough for Jim. Now I was also, and this is the thing, right? This market was desperate. They was desperate to find some sort of support. It just didn't find any until a couple of days ago, right? And now we have a range. We have a stair-step. We have a landing. We have something there, and from this range will come something. Will come for this, right? Either to the upside or to the downside. The thing here is that now the daily, weekly, and monthly have changed. Yeah? We have a trend to the downside now, right? You have a trend to the downside. Why you were taking trades to the upside? Why you were taking trades to the downside? Question those things, right? Now, value is overlapping. What are the odds, for example, today that we are going to have, a closing, a rally or a break today, are not that high. For me, I don't say that cannot happen, but based on, I wasn't focusing since KLM. I didn't pay attention to this market because I was just talking here. And all right, and I don't think we have good odds or any of those things. Also, remember Google. If something happened here, it can be after the close. Maybe a Nasdaq is the one that's going to have a bigger impact in Nasdaq. But which direction is going to be? I have no idea, man. I really have no idea. What happened with Meta after the close? It's not Google. My bad, is Meta. Tomorrow is Google and Amazon. Notice what is happening in Nasdaq, for example. Now, before closing the stream, we talk in the. No, I didn't talk in the morning about this because I didn't have a thing. But this is what I pay. This is another thing I watch. Why I took the short. I took the short. Notice where this pullback is, right? I like these pullbacks better after the European opening. And this guy was to the 100, and ES was to 0. This one here, to the tick, man, to the tick. And that was the play of this trade as well. Taking that sell. Now, what is support? Once it is support, it becomes resistance after that. But the main thing here, you got to monitor the action at all times. Okay, but it will. The odds that you got something out of it are going to improve if you put things in context. Okay, do your homework. That's really important. It's really important. Do your homework. Okay, we got this from the homework. We got this from the homework. If this doesn't work, you know that there is something to the upside here. You know, it's not that that doesn't work, right? It doesn't work to the downside, but it is working to the outside. It's having acceptance above here. So we start to monitor. Maybe the next thing how the center of this thing, right? The center of these single prints. Not from the day, but from the distributions that we have. You know, the 16-day distribution on the upper side and the 6-day distribution on the lower side. Okay. What I am watching here now is the ability of the market to close in this distribution here, closing this opening that we have here in the upcoming days. Now we have good things here coming. We have Meta, we have Google, we have Amazon, we have CP or PCE also on Friday, which is a really important thing as well. Especially PCE. I think PCE can be. We may have some back and forth here, but I believe PCE is the one that's going to give or may give direction. Direction to the market. Okay. I will pay more attention to the direction the market takes after PCE or after the day is over in PCE, rather than the ones that we may have today or tomorrow. Okay, for earnings. And unless you have any questions, I guess I'm going to call it a day. I wish you a good rest of the day. There's not much left here. I don't like to take trades at this time of the day, especially after knowing what is coming. We'll see you tomorrow. Alright guys, see you. Bye bye.